Did you know that 90% of retail investors lose money in the stock market over time? Shocking, right? The truth is, investing isn't just about picking the right stocks or timing the market. Most people are missing the strategies that really work, and that's costing them big. In 2024, the rules are changing. Global markets are shifting, new technologies are reshaping how we invest, and hidden risks are lurking in places you'd never expect. The question is, are you ready to take advantage of these changes, or will you get left behind? In this video, I'm going to share the secrets and strategies that nobody talks about. From hidden risks eating away at your wealth to surprising opportunities in places no one is watching, I'll show you how to get ahead in 2024. Stick around, because this could change the way you think about investing for good. Chapter 1. The silent revolution in global markets. The world economy is shifting in ways that aren't making headlines. For instance, did you know that by 2024, Asia is expected to account for 40% of global consumption? That's huge for investors who understand how to position themselves. The rise of middle-class spending in countries like India and Indonesia is creating fresh opportunities, particularly in e-commerce and consumer tech. A report by McKinsey points out that the global supply chain is undergoing a quiet but dramatic transformation. Companies are diversifying away from China, investing in Mexico, Vietnam, and other countries. This China Plus One strategy opens doors for investors in logistics and manufacturing hubs outside traditional markets. But here's the kicker: these shifts are happening under the radar. While everyone's still debating big tech and cryptocurrencies, institutional investors are pouring billions into renewable energy in Africa and smart infrastructure projects in Southeast Asia. Tip: look for ETFs that focus on frontier markets or green energy to get in early on these trends. Chapter 2. AI's hidden hand in your portfolio. Artificial intelligence is more than a buzzword. It's reshaping the way investing works. According to PwC, AI could contribute $15.7 trillion to the global economy by 2030. But here's the part nobody's telling you: AI isn't just about big tech, it's also about making better investment decisions. Take robo-advisors, for example. They've grown from managing $19 billion in 2015 to over $1 trillion today. Platforms like Betterment and Wealthfront use AI to optimize portfolios in ways human advisors simply can't match. They analyze millions of data points in seconds, spotting trends you might never notice. One fascinating example is the way AI predicts market behavior. A study from MIT found that machine learning algorithms were able to forecast market movements with up to 90% accuracy when using non-traditional data like weather patterns and social media sentiment. But you don't need to be a tech wizard to take advantage of AI. Many funds now integrate AI into their decision-making. Strategy: consider investing in companies that are building the AI tools shaping industries. Think beyond Silicon Valley. Startups in Europe and Asia are also making waves. Chapter 3. The green gold rush. No one talks about sustainability isn't just good for the planet. It's a goldmine for investors. By 2024, the global renewable energy market is projected to hit $2 trillion. But it's not just about solar panels and wind farms. The real growth lies in less obvious areas. For instance, rare earth metals like lithium and cobalt are crucial for electric vehicle batteries and renewable tech. A 2023 Bloomberg report revealed that demand for lithium is expected to grow by 500% by 2030. Investing in mining companies or ETFs focused on critical materials could pay off big time. Here's another overlooked sector: sustainable agriculture. Companies using AI and IoT to improve crop yields are attracting attention. The World Bank estimates that agri-tech investments have grown by 370% in the last decade. This isn't just a trend, it's the future of food production. But perhaps the most surprising opportunity is in green bonds. These are fixed-income investments specifically for eco-friendly projects. According to Climate Bonds Initiative, Global green bond issuance is expected to surpass $1 trillion in 2024. Pro tip: green bonds offer steady returns while supporting a sustainable future, a win-win for long-term investors. If you're finding this helpful, make sure to subscribe for more insights and strategies to stay ahead in the investing world. Chapter 4. The invisible risk eating your wealth. Most investors think of risk in terms of market crashes or inflation. But there's another type of risk that's quietly draining wealth: hidden fees and opportunity costs. Did you know that the average mutual fund charges a 1.25% management fee annually? Over 20 years, that could eat up nearly $60,000 in returns on a $100,000 investment, according to Vanguard. Worse, some funds charge back-end loads, meaning you pay hefty fees just to sell your shares. That's money you could have reinvested for compound growth. Another silent killer is drift. This happens when the assets in your portfolio no longer align with your goals. A Morningstar study found that portfolios with unchecked drift underperformed by up to 1.7% annually. Rebalancing your portfolio once or twice a year can keep this in check. And then there's the cost of inaction. Legendary investor Warren Buffett famously said, "The biggest risk of all is not taking one." If you're sitting on too much cash, inflation is eating away at its value. A dollar today is worth less tomorrow if it isn't invested. Strategy: use low-cost index funds to minimize fees and dollar cost averaging to stay invested without timing the market. Chapter 5. Micro opportunities with macro impact. Big wins don't always come from big moves. Sometimes, the best opportunities lie in niches most people ignore. Take fractional real estate, for example. Platforms like Fundrise and Arrived let you invest in properties with as little as $100. This gives you exposure to real estate without the headaches of owning a home. Another overlooked opportunity is niche SaaS, software as a service, companies. While everyone's focused on giants like Salesforce, smaller SaaS providers targeting specific industries are quietly growing. According to Gartner, the SaaS market is expected to grow 17% annually, driven by companies addressing unique problems like healthcare scheduling or agricultural analytics. Let's not forget hyper-local startups. With the rise of crowdfunding platforms, you can invest in businesses solving regional problems with global potential. For instance, companies creating water purification solutions for drought-stricken areas often scale their innovations worldwide. Even collectibles are making waves. Rare sneakers, Pokémon cards, and NFTs might sound like fads, but the alternative investment market is projected to grow to $4 trillion by 2030, according to Deloitte. Tip: allocate a small percentage of your portfolio to passion assets if you have expertise in a specific category. Chapter 6. The 2024 Blueprint for Stress-Free Gains. Investing doesn't have to be stressful. In fact, the best strategies are often the simplest. One proven approach is the barbell strategy, a concept popularized by Nassim Taleb in his book Anti-Fragile. It involves splitting your portfolio into two extremes: safe, low-risk assets like bonds and high-risk, high-reward assets like startups or emerging market stocks. This approach minimizes downside while maximizing upside. Another timeless tactic is diversification. It's tempting to chase the latest, hot stock, but as Nobel laureate Harry Markowitz said, diversification is the only free lunch in investing. By spreading your investments across industries, geographies, and asset classes, you reduce risk and improve long-term returns. And don't underestimate the power of hedging. With market volatility on the rise, assets like gold and treasury inflation-protected securities, TIPS, can act as a safety net. A study by the World Gold Council found that gold prices have a near-perfect negative correlation with stock market declines, making it a reliable hedge in turbulent times. Finally, automation is your best friend. Set up automatic contributions to your investment accounts and let compound interest do its magic. Albert Einstein called compound interest the eighth wonder of the world, and for good reason. Even modest monthly investments can grow significantly over time. If you enjoyed this video, don't forget to hit the subscribe button and stay tuned for more investment tips that can make a real difference in your financial journey.